All right, let's talk about Datamatics Global. And this company, of course, posted its Q3 numbers. It's been a strong quarter for them with healthy revenue growth and improvement in operating margins as well. There's, of course, that impact on account of the labor code. But let's talk about some of those numbers. Revenue increase of close to 20%. 20% at 510 crore rupees, EBIT standing at 75 crore rupees, or very close to that mark. Margin is improved quite considerably versus the comparable period. It's about 400 basis points or thereabouts, and the net profit on account of that impact of the labor code has declined, come in at 36.4 crore rupees, that exceptional item of 40 crore rupees coming through in the quarter gone by. We're joined by the management and specifically the Vice Chairman and Chief Executive Officer, Rahul Kanodia. Rahul, thanks so much for taking the time and for speaking to NDTV Profit. Absolute pleasure speaking with you. Help us understand that revenue figure, because I think a lot of people looking at that very closely. 20% looks robust. What has led to that?
I think it's a combination of a couple of things. First, there's been genuinely organic growth and healthy organic growth. Second is the acquisition that we made of a subsidiary called TNQ. And third has been some benefit of the exchange rate. So it's a combination of these things, but net, the organic growth has contributed very meaningfully for the revenue growth.
Okay. Specifically on the revenue front, though, I'm just wondering, and this is something that I think a lot of your investors, a lot of people watching this will wonder about, which is what is the share of AI in revenues and the medium-term outlook for that leg of the business?
So we've done about 65 odd projects in AI. It's hard to define a share of AI specifically because AI is getting integrated into pretty much every project. And therefore, it does not stand out as an AI project in itself. But yes, pure AI projects, we've done about 65. And then there's AI scattered around and sprinkled into every project that we can.
So, Mr. Kanodia, good morning, Tamanna here. Just taking that AI story forward, because this has been the question. How do you tabulate or how do you actually calculate what an AI project is? Is it the sprinkle on top? Because it's going to be in the base of pretty much everything that you do. Should you look at it from such a wide aperture or a narrower lens? How are you looking at AI revenues, and at some point would you want to report them as standalone?
So some of the projects are core AI, where it's fundamentally an AI-driven project. That's how we define AI. Then there's a sprinkling of projects all over. And in the existing projects, you do have some components of AI coming in. That technically is AI, but it's hard to therefore define what is the AI revenue or not. So what we are talking about is core AI, which is a project essentially designed on the base of AI.
On your core numbers, just want to clarify, the PAT drop is because of the labor code charges?
Yes, that's correct.
Okay. And why do you think this is going to have a broader impact? And I know every company has done this. Is this a one-time thing? Do you see any broader impact of labor code charges over time?
No, it is a one-time thing. On a recurring basis, it'll get merged into the quarterly employee cost, because this is a gratuity component. So this was a one-time because it had historical recalculation. And now that that's done, going forward incrementally, it'll be very minimal.
Mr. Kanodia, good morning, Neeraj here. And just trying to get a picture, since we are at the start of 2026, of the slightly longer time frame, when one looks at what you've done in the last 3 or 4 years, right, as a company, not only has there been steady top-line growth, but your operational metrics have improved year after year. I believe the trailing 12-month number on the operational metrics would be the highest in the longest time. Is this the new normal, or do you improve upon this? And is there a sense of what that number could be, let's say, 12 to 24 months down the line?
So there will be further improvement as we continue our cost control, as we continue our growth initiatives. There will be some uncertainty generally because of the economic situation globally. The US still is uncertain. Europe is looking better. But nevertheless, and also the advent of AI could be disruptive. But net, we are seeing a huge opportunity for us to leverage these technologies to provide transformational services to our customers. So net, I'm looking at a very healthy next 2-3 years. And therefore also on the profit.
Okay. And forgive me for not knowing this, but if you had given a guidance for FY26, are you on track to meet that or improve upon that?
So right now we are on track, and I think next year looks a little better than this year.
I mean, a little is how little, is it?
So no, yeah. So we I think are looking at a high single-digit organic growth. Plus, if there's anything inorganic, then we look at that. Where that lands.
On the annual, anything inorganic? I mean, you might not be able to predict, but are there conversations going on? Is my question.
There are conversations going on, not matured yet, where we are in a serious state. But yes, there are conversations going on.
Okay, I do want to ask about ROE, ROCE.
Yes.
And this is, of course, when you look at the last 4 years, there has been a little bit of a decline. And I'm wondering whether a bottom has been found and what the trajectory will likely be going forward.
So the ROC has also got to do with the current funds. But as we consume the funds, we are at about 14-15%. As we consume the funds in the acquisitions or certain capital expenses that we have planned, then obviously you'll have a different ROC coming up. So ROC should improve as we consume the funds for growth.
Mr. Kanodia, I want to understand about the banking segment. And for you in particular, this is domestic focused. It accounts for close to 20% of your revenue.
Yes.
What are the trajectories here? It is your fastest growing segment for most IT companies, but I think that's from the perspective of looking outside of India. So what are your expectations?
So the banking and insurance, that BFSI segment is very ripe with digital transformation and AI-based transformation, particularly. So we've got some very interesting projects going. We are doing that in India right now, and the agenda is to take those solutions to the international market. So our focus will be taking these new AI solutions into the international market once they've stabilized in India. And here we've got some live, interesting projects already started. So that's the strategy. Those companies are very open to the idea because they are very heavy with information processing, and that's where AI fits. So they are very open to the idea of using these technologies for changing and transforming their business operations.
Mr. Kanodia, I think EdTech, if I'm not mistaken, is one of your big drivers. Are you seeing a lot of AI integration there? What is the outlook for EdTech? And can you give us a segmental guidance split as well? I think BFSI and largely domestic has also done well.
So BFSI domestic has done well. EdTech is a little slow on adopting these technologies, essentially because we are targeting the education publishing segment, and they are a little sensitive to IP and intellectual property violations. So there's some fear that AI could violate IP rights of the authors, and that's why they're a little hesitant. But that's a very rife and potent segment to adopt AI because there's a lot of content. So I think it's a matter of time where the customers come around saying, okay, you're not violating author's IP, and they'll be okay with adopting this technology.
Okay, thank you so much, Rahul Kanodia, for speaking with us. As the Vice Chairman and CEO of Datamatics first on NDTV Profit. Meanwhile,